Hello and welcome everyone. Today we will discuss learning outcome one of personal taxation, understand theories and principle of taxation theories. My name is Yasir Gulfraz, and today's lecture we will explore the core theories and principle of taxation system, emphasizing individual taxation. Learning these theories and principle is essential for understanding the bigger taxation picture and how it affects people and society. The tax system is essential in government finance because it is used to raise enough money to support critical services and program. In addition to being a revenue generator, taxation also serve as a broader purpose. It is instrumental in determining economic behavior, income redistribution, and achieving key goals such as equality and efficiency. Self-assessment, just to check your knowledge, 1 to 10. 10 means as confident as possible or not confident at all if it's 1. So if anyone is there, can you guys see my screen and can you hear my voice? Okay. So indicative content, understand theories and principle of taxation systems, principles and features, principle of the UK tax systems, tax bases, tax structures, progressive, regressive, and proportional tax criteria, tax planning, tax avoidance, and tax evasion. Key differences between tax planning, avoidance, and evasion, ethical implications, current legislation's requirement to report tax evasion. So explain the key principle of tax systems used for individuals, purpose, UK taxation systems, type of tax structure. So here we have to understand why tax systems exist and what their purpose is. Tax systems are designed by government to collect money from individuals and businesses to fund public services such as healthcare, education, and infrastructures. So they serve as important source of revenue for the government to meet its expenditures requirements. Now, focusing specifically on the UK tax system, it is essential to recognize its professional and ethical framework. Tax professionals, including accountants and tax advisors, operate within a framework of professional standards and ethics. Uh, so, a significant distinction of gross is the difference between tax avoidance and tax evasion. Tax avoidance involves legally minimizing tax liabilities by utilizing tax planning strategies and taking advantage of available tax reliefs. On the other hand, tax evasion is illegal and involves deliberately evading taxes through illegal means such as underreporting income or false falsifying records. Features of tax system: a good tax system is fair, absolute, convenient, efficient, direct and indirect taxes, tax rate structures. So here we will talk about what makes a tax system good. A good tax system is fair, meaning it is treat everyone equally and justify. It is absolute, which means the rules are clear and consistent for everyone. Then a type of taxes you will encounter in a tax system. There are two main categories: direct, as you can see here, direct and indirect taxes. Uh, Direct taxes are all those imposed directly on individuals or businesses based on their income, profit, or wealth. Example includes income tax and corporation tax. Uh, Indirect taxes, on the other hand, indirect taxes are imposed on goods and services rather than on individuals or businesses directly. Uh, Value added tax and sale tax are common examples of individual indirect taxes. Tax revenues are essential for financing various public expenditures such as healthcare, pension, social benefits, and even government borrowing. So these funds are used to provide essential services and support the economy. So now let's discuss how taxes can be used by the government to stimulate certain sectors of the economy while controlling others. For example, the government might offer tax allowances on capital expenditures to encourage investment in manufacturing, uh, thereby stimulating economic growth in that sectors. Conversely, high taxes on items like tobacco and alcohol can be discourage their consumptions, promoting public health and reducing associated social costs. So, what makes a tax system goods a good tax system should be fair and transparent, meaning it reflects a person's ability to pay and operates in a clear and understandable manners. It should also be certain rather than arbitrary, ensuring that taxpayers know what to expect and can play accordingly. Convenience is another important aspect. A good tax system should be easy for taxpayer to comply with and pay. For example, in the UK, we have the pay as you earn system, which deducts taxes directly from salaries and wages. So making it convenient for individuals to fulfill their tax obligations. Efficient with low collection cost. Efficiency is also important. A good tax system should have how collect costs, meaning that the administrative burden and associated expenses of collecting taxes should be minimized. This ensures that more of the tax revenue collected uh, uh, can be used for public expenditures rather than administrative overheads. Direct taxes and taxes again. Direct taxes, these are taxes that are imposed directly on the individuals or businesses, and they are required to pay the tax directly to the tax authorities. Direct taxes, including taxes on personal income, such as salaries or wages earned by individuals, as well as taxes on businesses' profits. Additionally, taxes on disposal of chargeable assets like selling property for stocks are also considered. Direct taxes, example of direct taxes include income tax, capital gain tax, and national insurance contributions. Uh, Now when we talk about indirect taxes, unlike direct taxes, indirect taxes are not paid directly by the person or businesses that bears the ultimate economic burden of the tax uh, instead. So these taxes are imposed on one part of the economy with the intention that the tax burden is passed on the another. So one common example, yeah, is VAT, or VAT is applied at each stage of the production and distributions process, but it is ultimately paid by the final consumer of the goods or services. So the more the consumer consumes, the greater the paid tax paid. Any questions, any concerns, any issues so far? If anyone is there? Okay, tax base and tax structures. Tax can be classified based on what they are taxing. There are three main categories. Income on profits, for example, income tax and corporation tax, assets, for example, capital gain tax, and consumptions, for example, VAT or value added tax. So there are three types of taxes. Then we talk about, when we talk about income or profit, these taxes are based on the income or profit or profit earned by individuals or businesses. For example, income tax, which is levied on the earning of individuals, and corporation tax, which is imposed on the profit of businesses. Assets, these taxes are applied to the value gain from the sales or disposal of assets. Uh, mm, Consumption taxes, for example, VAT, these taxes are imposed on the consumption of goods and services. A value added tax or VAT is a common example of a consumption tax, as it is added to the price of goods and services at each stage of production and distributions. Now, progressive taxes, proportional taxes, and regressive taxes. So, progressive taxes, these taxes can increasing proportion of income as income raise. For example, income tax where taxes is charged at 20%, then 40%, and finally 45%. Proportional taxes, these take the same proportion of income tax as income rises. This is also known as flat taxes. These taxes take the same, proportion of income regardless of income level. So this means that everyone pays the same percentage of their income in taxes regardless of whatever they earn more or less. Proportional taxes are less common in practice. So next one is regressive taxes. These taxes, these take a decreasing proportion of income as income raises or rises. For example, national insurance contribution, which are charged at 12 and then 2%. Explain the feature of taxes, income, taxable, and exempts. Obviously, taxable income, this is the income that is subject to taxation by the government. It is including earning from various sources such as salaries, wages, profit from businesses, rental income, and capital gain from investments. When you calculate your income tax, you include all sources of your taxable income. So when we talk about exemptions, on the other hand, exempt income is not subject to taxation. This includes certain type of income that the government has decided should not be taxed. Examples of exempt income may include certain social benefits, scholarships, gifts, inheritances, and certain type of insurance proceeds. Explain the difference between tax planning, tax avoidance, and tax evasion. Tax planning, legal use of tax legislation to minimize tax bills, use of reliefs to reduce tax bills, normally done by accountants or financial advisors. Tax avoidance, legal use of tax legislations but not follow intent of the law. Tax evasion is, uh, you know, uh, basically legal use of tax laws to reduce one's tax liability. The key difference from tax planning is that tax avoidance exploits unintended loopholes or gaps in the tax laws, allowing individuals or businesses to pay less tax than intended by the government. While tax avoidance is technically legal, it may be viewed as unethical or unfair by some because it goes against the spirit of the tax laws, even though it may comply with the letter of the law. Tax evasion, illegal ways to pay tax, for example, concealing income. Uh, this is illegal. It involves deliberately under reporting income, inflating expenses, or engaging in other fraudulent activities to avoid paying taxes owed to the government. So this is serious offense and can lead to serve penalties, including fines and imprisonment. So tax evasion is considered a form of cheating, and it is strictly, prohibited by law. So next is the objectives and functions of taxations. Purpose of taxation: the raise of money for the government, uh, provide infrastructures, provide services. So taxation is a way for the government to raise money. The money is essential for the government to provide public goods and services such as building roads, schools, hospitals, and maintaining law and order. Without taxation, the government would not have the funds needed to carry out these important functions and invest in infrastructures that benefits everyone in society. Then redistribute wealth. Another important purpose of taxation is to redistribute wealth. This means that through taxation, the government can collect money from those who can afford to pay more taxes and use it to support those who are less fortunate or in need. So, for example, tax revenue can be used to fund social welfare program, healthcare, education, and housing initiatives, helping to reduce income inequality and provide a safety net for vulnerable members of society. Also, taxation uh, can be used to encourage or discourage certain activities. For example, the government may offer tax incentives such as tax deductions or credits to encourage behaviors that are deemed beneficial for society, such as saving for retirement or investing in renewable energy. On the other hand, taxes may be imposed on activities that are harmful to society, such as smoking or excessive consumption of, sugary drinks, or discourage these, behaviors and promote public health. Any questions so far? If anyone is there, the objectives and functions of taxation. Uh, Principle of taxation system: neutral, efficient, simple, and certain, effective, fair. Uh, the objectives and functions of taxation. First, we have the principle of neutrality. This means the tax system should try to avoid influencing people's economic decisions. In an ideal world, tax would not push people to do things they wouldn't normally do just to save on taxes. In reality, this is not always the case, as taxes can sometimes impact how people behave in the economy. Then we talk about efficiency. Uh, Efficiency, we want our tax system to be efficient, meanings that benefit of collecting taxes should outweigh the cost of administering and enforcing them. We don't want the process of collecting taxes to to be too expensive or complicated, as this can waste resources that could be better used elsewhere. So simplicity and certainty uh, uh, are also important principles. A tax system should be easy to understand and follow the both taxpayer and tax authorities. People should know what taxes they owe and how to pay them without too much hassle or confusion. So, certainty means that the taxpayer should be able to predict how much tax they will owe based on clear and consistent rules. Effectiveness is another, key principle. The tax systems should be able to achieve its intended goals, whether that's raising revenue for the government, redistributing wealth, or influencing economic behavior. If the tax system is not effective, then it is not doing its job properly. Fairness based on liability to pay. Fairness means taxes should be based on a person's ability to pay. This means that those who earn more or have more resources should contribute more in taxes than those who earn less or have fewer resources. Fairness also means that everyone should be treated equally under the tax laws, regardless of their income or social status. Tax on individuals, liability to taxes, income tax, capital gain tax for the tax year, for example, 6 April 16 till 5th of April, HMRC administrators UK tax system. Uh, Basically, you know that income tax, this is tax based on the money you earn, whether it's from your job, investment, or any other source of incomes. So every year from the 6th of April to the 5th of April, it's a tax year known as the tax year. Individuals are required to report their income to HMRC, which stands for Her Majesty Revenue and Customs. HMRC is government body responsible for administering taxes in the UK. Income tax is not the only tax individuals need to be aware. There's also capital gain tax. This tax applies when you make a profit from selling certain assets like stocks, property, or valuable possessions. Just like income tax, you need to report any capital gains to HMRC within the tax year. Objectives and functions, again, the tax base and structure. What is tax structure, what is tax base, and what is tax rate? So uh, what does the tax structures mean? The tax structures refers to the way a tax system is set up or organized. It includes the various types of taxes that exist within a tax system, such as income tax, value added tax, or capital gain tax. Each tax services a specific purpose and contributes to the overall revenue collected by the governments. When we talk about tax base is essentially what the tax is imposed on. It is the measure or criteria used to determine how much tax an individual or entity owes. For example, income tax, the tax base is the income earned by individuals or businesses. Uh, in capital gain tax, the tax base is the profit made from selling assets. So tax rates means the percentage of the tax base that individuals or entities are required to pay in taxes. So these rates can vary depending on the type of taxes and the level of income or gains. For example, income tax rates may increase as income levels rise with earners paying a higher percentage of their income in taxes. In the UK, some of the key tax bases, including uh, income tax, capital gain tax, national insurance, and inheritance tax. So you know that income tax is the base for income tax is the income earned by individuals, capital gain tax, profit made from selling assets such as stock, property, or valuable possessions. Then national insurance includes earning from employment or self-employment above a certain thresholds. Inheritance tax based base for is the value of an individual's estate upon their death, including property, possessions, and investments. The objectives or the rates of taxations, again, three possible models: progressive, regressives, and proportionals. So, progressive in a progressive tax system, tax rates increases as the taxable income or wealth of individuals or entities increases. So this means that higher income earners pay a higher percentage of their income or wealth in taxes compared to lower income earners. Uh, a regressive tax rate model or a regressive tax system, the tax burdens falls more heavily on lower income individuals or entities compared to higher income ones. This is considered unfair because it means that those with lower income end up paying a large proportion of their income in taxes compared to those with higher incomes. This is, regressive tax system are less common and are generally considered less equitable. Finally, proportional tax rate model or system, also known as flat tax systems, all individuals or entities pay the same percentage of their income or wealth in taxes, regardless of their income level. So this means that everyone pays the same tax rates, regardless of whether they are higher income earners or low income earners. VAT is an example of a proportional, tax where the same percentage tax is applied to the sale of goods, services, regardless of the buyer's income level. Any questions so far? If anyone is there, any questions? Can you see my screen or hear my voice? Okay. So UK tax system. First, we have HMRC, which stands for, Her Majesty Revenue and Custom or Tax Office in the UK. This is the government department responsible for collecting taxes, enforcing tax law, and administering various social and economic policies related to taxations. So next is a tax year. Uh, uh, Also known as the fiscal year assessment year in the UK. The tax year runs from April 6th of one year to April 5th of the following year. It is during the this time that individuals and businesses report their income and pay taxes. Legislations play an important role in the UK tax systems. There are two main type of legislations: Act of Parliament and statutory instruments. Act of Parliament are law passed by member of parliaments through debate and voting. These laws are usually updated annually through Finance Act, which introduce changes to the tax system. Other hand, statutory instrument are detailed rules made by civil servants and other bodies like the Council of Europe. These rules provide specific guidelines for the operation or of tax laws and are laid before Parliament of uh, scrutiny. Case laws also play a significant role in interpreting tax legislations. When tax laws are unclear or disputed, courts, including tax tribunals, interpret the legislations and make decisions that set precedent for future cases. Uh, then HMRC guidance, which provide practical advice and explanations on how to comply with tax laws. This guidance helps individuals and businesses understand their tax obligations and navigate the complexities of the tax systems. Any questions so far? If anyone is there, any questions or any concerns? Right. UK tax system, tax laws, detailed regulations in statutory instruments or SIS does not have force of law. So again, we have statute law, which consists of Act of Parliament. These acts are laws passed by Parliament and have the highest authority in the legal systems. They provide the framework of taxations and are subject to debate and provide approval by a member of parliaments. Additionally, case laws plays a vital role in interpreting statute law. Courts, including tribunals, make a decisions on tax cases, which helps clarify and interpret the laws established by parliament. Detailed regulations found in statutory instruments or SIS. Uh, these are rules made by government bodies such as the Treasury of HMRC under powers delegated by Parliament. SIS do not have the same level of authority as Acts of Parliament. They provide specific guidelines and rules for the applications of tax laws. Then HMRC guidance plays an important role in helping taxpayers understand and comply with their tax obligations. HMRC issues various forms of guidance, including statement of practice, extra statutory concessions, leaflets, revenue and customs briefs, manual and working together publications. So these resources provide practical advice, explanations, and interpretation of tax laws and regulations. Any questions so far? Okay, residence and domiciles taxpayers are taxed in the UK with reference of their residence and domicile. What is residence? When we talk about what is residence? So, residence refers to where a person lives for tax purpose. In the UK tax system, individuals can be considered residents based on certain criteria. There's something called the short-term test, which looks at whether someone spends a significant amount of time in the UK in a particular tax year. So, this last considers factors like the number of days spent in the UK during a tax year, The rules around residence can change quite easily depending on where a person spends their time, making it easy to gain or lose residence status. When we talk about domicile, domicile is a broader legal concept that looks at a person's permanent home or where they have their roots. Unlike residence, they can change frequently. Domicile is more about long term connections to a particular place. It is often tied to factors like where a person was born on their family ties. For example, someone might have their domicile in the UK if they were born there or if their father has UK domicile status. Domicile of origin uh, uh, is something you are born with. It inherited from your father and birth. So this means that what you are when you are born, you automatically acquire your father's domicile, no matter where you are born. So this is often referred to as your domicile of origin. Impact of these rules on taxpayers. Residence is about where you have been living. If you have spent a significant amount of time in the UK during a tax year, you are considered a resident for tax purpose. This means you will need to pay tax on your UK income. Uh, Domicile is more about your permanent home. It is if the UK is your long-term home, meaning your plan to stay here indefinitely. So uh, then you have indefinitely. So then you are considered domiciled in the UK. So this affects how your income from both the UK and overseas is taxed. If you are residents and domiciled in the UK, you will have to pay tax on all your income, whether it's from the UK or abroad. So if you are not domiciled in the UK, you might not have to pay tax on income you earn outside the UK. As long as you keep it outside the country and don't bring it into the UK, this is known as the remittances basis of taxes. Again, he's talking about tax planning. What is it? Legal way as government intended, pension schemes, ISA, investment saving accounts, and transfers between spouses. Uh, Tax planning is all about arranging, finances in a smart way to legally reduce the amount of tax have to pay. It is like playing a strategic game with money to make sure keep as much as of it as possible while still following the rules set by the governments. So there are many legal ways to plan your taxes. For example, you can take advantage of pension schemes or ISAs or individuals tax accounts to save money for the future while getting tax benefits. You can also make use of tax efficient investments or charitable donations to lower your tax bills. Another common tax planning strategy is to transfer assets or income between spouses. This can help to balance out our overall tax liability as a couple. So, overall, tax planning is about being smart with our money and making the most of the tax laws in place to ensure pay the right amount of tax, not more than need to. So it is all about keeping more of your hard earned cash in our pocket while still playing by the rules. Tax avoidance is when someone uses the laws in a way what was not exactly how the government intended. So it is like finding a loopholes or bending the rules to pay less tax than you should. This can get pretty complicated because it involves taking advantages of technicalities in the law. Sometimes tax avoidance can be seen as putting from over substance, meaning you are following the letter of the law but not the spirit of it. So, in other words, you are doing things that might technically be legal but do not really make sense in the broader context. Tax avoidance can involve setting up complex structures or doing artificial transactions that don't really have any purpose other than to lower your tax bills. Uh, while it might not break any laws, it can still be seen as unethical because it is not really, you know, playing fair. So tax avoidance in is when someone like a self-employed businessman tries to legally reduce their tax bill. So, for example, they might set up their business in a certain way or claim deductions for expenses that are allowed by law. Uh, they might do this in a way that not entirely genuine. For instance, they might exaggerate, their expenses or manipulate their income to pay less taxes. While they might not break any laws, it is often seen as bending the rules or exploiting loopholes in the tax system. On the other hand, tax evasion, here is a talking about always illegal, not declaring overstatement of expensive, understatement of revenue. So this is when someone deliberately or intentionally tries to cheat the tax system by not declaring all of their income or by overstating their expenses. For example, they might fail to report income from their businesses or lie about their expenses to reduce their taxable income. This is against the law and can result in serious consequences, including a fine or even, jail time. Tax planning next is involves using legal strategies within the framework of tax laws to manage one's financial affairs in a way that minimizing tax liability. It's like arranging your financial matters in the most tax efficient manners possible, taking advantage of available tax reliefs and allowances. For example, contributing to a pension scheme, of investing in individual saving account or common tax planning strategies. Tax evasion, tax avoidance, uh, on the other hand, occurs when individuals or businesses exploit loopholes in the tax laws to reduce their tax liabilities beyond what was intended by the government. Tax evasion is always illegal. It involves deliberately, intentionally underreporting income, overstating deductions, or hiding assets to avoid paying taxes on to the government. This is a serious offense that can result in severe penalties, including fines and imprisonment. It is important to seek proper tax advice when emerging your taxes. Tax advisors or your financial advisor can assist individuals and businesses in navigating the complexities of tax laws and ensuring compliance while optimizing tax efficiency. It is also essential to differentiate between legitimate tax planning potentially legal tax avoidance, and outright illegal tax evasion. Always stay on the right side of the law and ethical standards when managing your tax affairs. Any questions so far? Okay, so ethics for a tax practitioners. As tax practitioners, we adhere to five fundamental ethical principles outlined by organization like the AAT, Association of Accounting Taxations. These principle helps ensure that we maintain, integrity, professionalism, and trustworthiness in our interaction with clients, colleagues, and tax authorities. So this is called PIPCO. So analyze the ethical and legal implication of tax avoidance and tax evasion. Here, we are going to discuss the ethical and legal implications surrounding tax avoidance, legal tax evasion, and the responsibilities that tax practitioners have in navigating these complex areas. So, uh, let's start by understanding the difference between tax avoidance and tax evasion. Tax avoidance is involves using legal means to minimize tax liabilities, as I said previously, often by exploiting loopholes in tax laws. On the other hand, tax evasions in the illegal act of deliberately under reporting income or overstating deductions to avoid paying taxes on. As tax practitioners, we have ethical and legal responsibilities to our clients, tax authorities like HMRC, and society as a whole. Any questions so far, if anyone is there? Okay, ethics for a tax practitioners. In addition to these, tax practitioners must also adhere to legal obligations and regulation. This includes the PEPCO, as I discussed above, means the Personal Independence Policy Code of Conduct, and the Tax Practitioners Act. Uh, Tax Practitioners Act. Uh, this includes which requires practitioners to act in the best interest of their clients and maintain independence and objectivity in their works. So when it comes to interacting with HMRC and the law, tax practitioners must be open, honest, and constructive. We must provide accurate information to HMRC and cooperate fully with any inquiries or investigations. Confidentiality is important in tax practice. As client trust us with sensitive financial information, we must ensure that client information is kept secure and not disclosed to anyone without proper authorizations. Before submitting a tax return on behalf of a client, it is essential to obtain their approvals and ensures that all information provided is accurate and complete. If we discover errors, omissions, or failure to file, we must approach the situation with honesty and integrity. This may involve informing the client of the issue and working together to rectify it, or in some cases, reporting the matter to the appropriate authorities. By adhering to these ethical principles and legal obligations, tax practitioners can uphold the highest standard of professionalism and maintain the trust and confidence of their client and the public. Ethics of tax practitioners. As a tax practitioners, we have a responsibility to uphold ethical standard and and act with the integrity in our works. When we encounter errors, omissions, or failure to file in a client tax affairs, it is essential to approach the situation carefully and ethically. Uh, if client refuse advice, this is our duty, to provide, to explain, uh, uh, you know, to the client and seek their permission to disclose, uh, any it is essential to approach the situation carefully and ethically. So we must bring the issue to the attention of the client and seek their permission to disclose any relevant information to appropriate authorities. We should explain the basically potential consequences of the error, including any additional tax liabilities, penalties, or interest that may apply. If the client refuses to address the issue or take appropriate action, we must advise them verbally of the consequences of their decisions. It is important to communicate the potential risks and implications clearly and honestly. So here it says if client refuses advice consequences verbally, it still refuses resign in writing. If in a firm report to money laundering reporting officer, self-employed report directly to National Crime Agency or NCA, considered whether to advise HMRC about previous reliability of previous submission, considers response to professional clearance letter from future advisor. So, if the client refuses to address the issue, we may need to consider resigning from representing them in a firm setting. We would report to the matter to the money laundering reporting officer for further action. If we are self employed, we would report directly to the NC or National Crime Agency as required by anti money laundering regulations. In addition to addressing the immediate issue, we should also consider whether to advise HMRC about any previous reliability issue with the client tax submission. This is important for maintaining transparency and integrity in our dealing with tax authorities. The ethical guidance of client confidentiality is very important. Obviously, client confidentiality is of utmost importance. It is fundamental ethical guidance guideline that we must adhere to at all times. Confidentiality means that we don't discuss our client affairs with anyone else without their without their permission. This includes not sharing any information about their tax matter with third parties such as friend, family members, or other professionals unless we have received proper and specific authorizations from the client. We also need to take great care in handling and storing any documentations or record relating to our client affairs. So this means keeping their information secure and ensuring that it is not accessible to unauthorized individuals. However, there is an exceptions to these rules. We are legally required to disclose information by law, such as response to a written information notice from HMRC. Then we must comply with the legal obligation to provide the requested information by maintaining strict confidentiality and respecting our client's privacy. We build trust and confidence in our professional relationship. uh, it is essential aspect of our ethical responsibility as tax practitioners to safeguard our clients' sensitive information and uphold their confidentiality rights. Here, for further reading, you can visit kaplanpublishing.co.uk, uh, and also you can visit your learning management system or Moodle for further reading. And that's it for today. Or if you have any question, concerns, or issues, you can email me at yasir@ukversity.co.uk. And that's it for today. Thank you very much. And I'll see you Saturday, next Saturday, for our next session at half 11. And thank you very much for now. And have a good weekend, everyone. So, bye for now. Bye, everyone.